Welcome, my name is Vishal Tekshanani. Today I'm speaking to Andy Vesey, the CEO and Managing Director of AGL Energy, and we're going to cover a lot of ground in today's interview. We're going to talk about the Liddell power plant situation. We're going to talk about how AGL's business model is changing as it phases out the use of coal. We're also going to talk about the company's approach to capital management and how it plans to fend off competition in the industry. Andy, how are you? Great to have you here.
I'm wonderful. It's a pleasure to be here.
Great. So Andy, let's start off with the major item, which is Liddell. Can you just give our investors a 30,000-foot view of why this asset's so important within the AGL portfolio, and why is the government so concerned about it?
Well, look, every plant we have in the portfolio is important. We have customer load to meet. We have a portfolio that's designed to meet it very cost effectively. And our view is that for the next 5 years until closure, that plant has a very important role in serving our customers, providing not only very cost effective energy, but the security and capacity that it needs. However, in 2015, we came out with a greenhouse gas policy, specifically to remove the risk of carbon dioxide emissions to both our shareholders and our customers. Our view is the world is recognizing and moving from policy settings, but also sentiment, that CO2 emissions is not a good thing. And we, as the largest ground source emitter of CO2 in Australia, realize it's our responsibility to help transition that so that we can make sure that we're serving our customers and our shareholders for the long term.
Okay, so it sounds like you're moving to this low carbon, you're aligning to this low carbon world. So why is the government so concerned?
The government was very shocked with the closure of Hazelwood with very short notice, 5 months. And that sent shockwaves through the markets and drove up prices. We've given 7 years notice for our plant, but the concern that the closure of this plant will impact reliability is a concern. And the government asked us to produce a 90-day plan to show how we're going to replace it, which we did, and which was also reviewed by the Australian Energy Market Operator, and said that our plans eliminate any risk to the market of any disruption or any unreliability. But government is always concerned about the performance of this sector. There's no other sector that is vested with the public interest. But we realize that as well. But we have a plan, and our plan is going to deliver high reliability and lower costs than any extension of a 50-year-old coal plant. Coal plants don't last forever.
Yep.
And the reason they don't is because they see tremendous thermal gradients, and that really degrades the metal. They're not evergreen. So we have a plan to make sure that we're investing the right amount of money to get the right amount of value, to get it to when it's 50 years old, and then move on. And our transition is going to be seamless. We're going to make sure that we're putting investments in place so when that plant closes, our customers, the market, and our shareholders will see no impact. It will be not only business as usual, but business better than usual.
Okay, so you seem very confident, and you've announced this policy that you're going to phase out all of your coal-fired power stations by 2050. So you're fairly confident that there's not going to be an impact to your business model. Shareholders can still expect that same reliability of earnings from a utility company. But how would you respond to, say, household concerns around, well, you're investing in all these new technologies. Are my lights going to be on all the time? And what does that mean for my power bills?
Well, look, at the end of the day, we operate because we have a social license, and we're in a competitive marketplace. The fact of the matter is that the technology exists to make sure that people don't see interruption. The energy that you get from what they call intermittent sources is backed up by traditional sources, so that there's no difference. And around the world, people know that you can do that. Now, there are some concerns that if you do it too fast, if you don't have the right policy settings, that bad things can happen. We will never do bad things. We're in this game for the long term. AGL's been around since 1837. This transition can be managed well. We expect that there will be good policy settings coming out of government so that the benefits of a well-run electric system will be delivered to Australians. So I don't think they need to be concerned. Likewise, I don't believe investors need to be concerned. What investors should be concerned about, if you have a business that is not seeing the future, that is not recognizing the risk that it has in terms of emissions, if it doesn't realize it does need a social license to operate. We understand all these things, and that's what's driving us forward. So shareholders should be confident that they have a management that's looking forward, that's seeing the transitions necessary, that's making the right investments, that's leading the discussion for them to make sure that their investments are protected, that they will see the benefits of the investment thesis that they're acting on, and that consumers will, by choosing to be customers of ours, basically reaffirming the social license we have to operate. So we're pretty confident. Is it easy? No, because being in the lead is always a tough place to be, but I'd rather be leading this from the front than having others lead and us following. That's giving up the game, right? And I think there's much more risk to both our customers and our shareholders if we're standing back watching it evolve. We're out in front, we're making the right decisions, we're advocating on behalf of our customers and our shareholders. I think we're doing the right things. We're participants in a worldwide transition into the future, and we're very comfortable where we are.
Okay, so let's focus on the capital management element of your business. So you're moving to this low carbon world, you're investing in all these new technologies. So you're going to have a heavy CapEx budget, of course. Now, what does that mean for the trajectory of your dividends?
Okay, well, look, let's start. I don't know that we have a heavy CapEx commitment. We have to manage the existing plants we have, and there is a maintenance obligation that comes along with that. So when you have an asset, you actually inherit a series of payments that you have to make it perform. Our decision to shut these down at date certain allow us to make sure we're never over-investing in these plants for the operations we're going to get out. And we review and do risk management around every investment we make to make sure we're spending the least amount of capital to get the performance out of it. Going forward, we're not necessarily interested in putting our capital in large renewables projects, because for us, the people who have the lowest cost of capital should do that because it's only capital. But where we want to invest our money, the opportunities we were looking for are involved in a portfolio of opportunities. One is to invest in those technologies that will help firm up those intermittent resources, gas technology, whether that's gas turbines or internal combustion engines. The other thing we're investing is when storage comes along, we really want to do that because bringing storage changes the whole game as well. So where there is a need to have new technology, where there's a management premium to operate, where it's not just based on cost of capital, but on the capability of management to drive value, that's where we want to put our capital. And we will only put our capital where we can make sure that we're getting our historic rates of return, so we're driving value. We're not just interested in deploying capital, but deploying capital to drive value.
Okay, and so are you able to quantify dividend increases going forward?
Well, I never would. We have a dividend policy, which is very clear and very safe. It's a 75% payout ratio, and it's 80% frank. That's what it is. It's reviewed on an annual basis, but that's the new setting. Given our liquidity, given our balance sheet, given our cash flow, we believe that we're going to be able to continue to meet that standard going forward.
Okay, so last point on competition. We've seen that churn rates across the industry are increasing as households look to save on their power bills. So what's AGL doing to make sure that its customers are as sticky as possible and that you're adding new customers?
Right. Well, first thing I want to say, we're all for competition.
Sure.
Why? Because competition keeps people from intervening into our business. The best way to have stickiness is to meet and earn that social license that people believe in what you believe in. B, that you're providing them value and you're giving them control. So simplicity, transparency, control is what we want to drive to our customers. That's why we've invested $300 million in a customer experience transformation program, which is bringing digital technologies, driving apps, giving people control so they feel comfortable, that they can understand how they're interfacing with us, how they get value, how they consume energy, and have more control over what we're doing. Getting closer to the customer, and we have 3.7 million retail customers, is a key part of our strategy. The two elements are prospering in a carbon-constrained future and building customer advocacy, and we're doing everything we can to make sure customers choose us, but not only choose us, but advocate for our brand. That's what drives us, because we know the closer we can get to our customers, the more security we can have as this industry changes.
Okay, that's great. Andy, thank you so much for coming in to speak to me and to speak to our investors about the current state of affairs at AGL and your future prospects.
My pleasure. Thank you.
No worries. You're welcome. I hope you enjoyed that video. Now, please remember what we talked about today is just general information only. It's not a recommendation to transact in AGL's shares. If you're thinking about investing in AGL or any other listed security for that matter, it's very important that you do your research and consider seeking financial advice so that you can get the help in making a decision that's right for your circumstances. My name is Vishal Texanlani, and I'll see you next time.